Most people think the safest place for money is the bank. They work hard, they save, they deposit money, and when they see the balance on the screen, they feel safe. But rich people think differently. They know a bank account can hold money, but it does not always protect wealth. That is why rich people do not keep all their money in banks. Not because banks are bad, because banks are useful, but rich people use banks as a tool, not as their entire wealth plan. The first reason is inflation. Imagine you have $50,000 sitting in a bank account. After 1 year, the balance may still say $50,000, but rent is higher, food is higher, gas is higher, insurance is higher, and everything around you costs more. So even though the number looks the same, your money can buy less. That means your money is quietly losing power. Most people look at the balance, but rich people look at buying power. They ask, is my money growing or is it slowly becoming weaker? The second reason is low returns. Most normal bank accounts pay very little interest. Sometimes the return is so small that it cannot beat inflation, so your money is sitting there doing almost nothing. Rich people understand that money should have a job. Some money stays in cash for emergencies, some money stays for bills, but the rest is placed into assets like real estate, businesses, stocks, retirement accounts, and other investments. They do not let all their money sleep in one place. The third reason is access. Most people think my money is in the bank, so I can use it any time. But that is not always true. Large transfers can be delayed, accounts can be reviewed, fraud checks can freeze activity, banks can place limits, and during legal, tax, or business problems, access to money can become complicated. Rich people do not wait for problems. They prepare before problems happen. They use different accounts, different banks, and different assets. This gives them more control. The fourth reason is protection. Many people mix all their money together. Personal money, business money, investment money, and emergency money. Everything goes into one account. It feels simple, but it can be risky. If a business problem happens, personal money can be affected. If a lawsuit happens, mixed money can create confusion. If tax records are messy, one mistake can become expensive. Rich people separate their money. Business money stays separate, personal money stays separate, investment money stays separate, and rental income stays separate. This is not just organization, this is protection. That is why wealthy people use business accounts, legal structures, insurance, and clean records. The fifth reason is opportunity. Cash in the bank feels safe, but too much cash can make you slow. When a good opportunity appears, rich people want to be ready. A property price drops, a business deal appears, or the market gives a discount. Rich people want flexibility, but they also do not want their entire wealth sitting idle. This is the difference. Poor people save money and stop there. Rich people save money, then position it. They ask, where should this money go next? How can this money grow? How can this money stay protected? So the real lesson is simple. Banks are not bad, but banks are not the whole plan. Rich people use banks for convenience, they use assets for growth, they use insurance for protection, they use legal structures for separation, and they use advisors to avoid costly mistakes. Because wealth is not just about earning money, it is about controlling money, protecting money, and making sure one crisis does not destroy everything. So ask yourself, is your money really safe, or is it just sitting in the easiest place? Because rich people understand one thing most people learn too late. Money kept in the wrong place can slowly disappear, even when the balance still looks the same. Like this video, subscribe for more smart money lessons, and comment bank if you want more videos like this.